Hey there traders, welcome back to another no-nonsense market recap from Bullish Bear. Grab your financial first aid kits because this bloodbath is flowing this week. The S&P 500 has plunged 10% since last month's high, wiping out a staggering $5 trillion in value over just 30 days. As the great Warren Buffett once warned us, there's simply no telling how far stocks can fall in a short period. And boy, is the Oracle of Omaha proving prophetic once again. So what's behind the carnage? Look no further than the White House. President Trump has doubled down on his terror strategies this week, saying that we've been ripped off for years and he will no longer tolerate it. And if you needed another reason to reach for the bottle, President Trump's latest threat of a 200% tariff on European wines and champagnes might just do it. Ironic, isn't it? The very libation we need to calm our investor nerves might require a second mortgage. Even though the president assures us that this tariff turmoil is merely a speed bump on the road to economic glory, not everyone is toasting to this prediction. JP Morgan CEO Jamie Dimon has noticed the economic engine sputtering, pointing the finger squarely at tariff uncertainty. His team has cranked up the recession probability meter from 30% to a nail-biting 40%. Even Wall Street optimist Ed Yardney is pumping the brakes. He slashed his bullish S&P target for 2025 by nearly 9%, down to 6,400 from 7,000, with a bearish floor of 5,800. Meanwhile, wholesale inflation flattened in February, sending chills through trading floors nationwide and leading investors to wonder if inflation could make a sinister comeback. Right now, Tesla shareholders are feeling like they're stuck in a car with no brakes as the stock suffers its steepest drop in the last 5 years. But before you cash out and build that doomsday bunker, here's a glimmer of hope amidst the financial fog. The consumer price index has inched just 0.2% last month to 2.8%, creeping closer to the Fed's 2% target and triggering a mid-weekly rally. Consumers are finally catching a break at the grocery store, with egg prices dropping to 3-year lows. On top of that, gas prices and mortgage rates are also heading south. So finally, there's some welcome news for our wallets. Amidst the sell-off carnage, several household names have hit 52-week lows, including Adobe, Target, JB Hunt, and Toll Brothers. Bargain hunting, anyone? Microsoft just blew out its 38th birthday candle on Thursday, and D.A. Davidson analysts delivered quite the present, upgrading the tech giant to a buy with a juicy price tag of $450. Intel bucked the downward spiral with a remarkable 14.6% on Thursday after announcing a new CEO. After bleeding 45% over the past year, Intel investors finally have something to celebrate. For the future, keep your radars tuned to nuclear energy plays. Tech behemoths like Amazon, Google, and Meta have pledged to triple nuclear energy by 2050. Stocks like Cameco, Union Energy Corp, and Public Service Enterprise Group could also be worth watching. So yes, the market's wobbling like it's had one too many martinis, but Clark Kendall, CEO of Kendall Capital, reminds us that this volatility is nothing we haven't weathered before. Today's market jitters might just lead to tomorrow's golden opportunity. The savvy investors among you know that buying when others are fearful might just lead to the sweetest rewards when the market rebounds. If any of this market volatility has you feeling like you need to up your trading game, check out our other YouTube videos and our website at bullishbear.com. But until then, manage your risk, stay disciplined, and remember, bears make money, bulls make money, but pigs get slaughtered.